Good evening, everyone. Welcome to Copycat Trading. My name is Brian, and I am going to be doing a short lesson tonight on what a candlestick is and what volume is. So I've had a couple of people ask that while I was going through some of my videos on reviews and the daily update videos, and then also whenever I go through trading, I throw around a lot of terms like the candle is going here and the close is this and the volume is here. And so I thought I'd do a little video just to be able to illustrate a little bit of what those are so that nobody's confused on that. And what I'm going to do is I'm going to take my pointer and I'm going to be moving back and forth between this crosshair here and this arrow so that we can look and try to get things out of the way as well. This reflects the spiders, and when I say spiders, I'm sorry, let me go up to spiders. This reflects the spiders, and when I say spiders, I mean S&P 500 ETF, SPY, and there's actually an ETF that is underlying the S&P 500. And so it's cut down by quite a bit, and I'm not going to go into that right now, but these are what's called, this chart right here is reflecting what's called the price action. The price action can be demonstrated or can be shown in multiple ways. So if I switch this button here, I can actually go to the way that a lot of people on the television and the internet reflect price action. They reflect it with just a little line graph. And you've seen this whenever you were in school. The line graph is the one that most people like because it reflects what they're used to from school whenever they were looking at graphs. And of course, this would be the x-axis and this would be the y-axis. The one that I'm going to focus on tonight is what's called the candles chart. There's hollow candles and there's candles. I like candles. Candles basically show you that when the price opened high, and I'm looking at this particular candle right here on July 27th, when the candle opened high and dropped, that is a candle that is showing you that the price dropped. It's red, and it's very easy to determine that. Whenever the candle is green, the one right next to it, the price opened up down lower and went up. So you've got down candles marked in red, and you've got green candles marked in, or candles that went up in price are marked in green. So, and you can do that on all time frames. Now, some people prefer these bars here, and they show you the exact thing. They show you where the candle opened, and they show you where the candle closed, and some people prefer those, but I prefer the candles themselves. So the candles here, let's just take a look at these ones. We'll just focus in on just some easy ones right here, right at the beginning. And this is one of the weaknesses of TradingView. This candle right here should be red. This is an up day. All that means is down at the bottom of this candle, you can imagine that the price opens up at the bottom of the body of this candle, the big part, and then it goes up. And whenever it gets to the closing portion, whenever the day closes, then the top here is of the body is solid, and that's where the candle closes. That's where the market closes. And of course, this is on the daily chart. So vice versa, on a nice down day, the candle opened from up here and it went down here and it closed right here at the body of the candle. This is the body of the candle. Now you might notice also these areas here, those little lines coming off, those we call wicks. And at some point during the day, what those wicks represent is that at some point during the day, the price action visited this area, but it was not the close and it was not the open. The open was here. It may have gone up after that, but then it came back down and it visited this area right here, and then it went back up and it closed right there before the market closed. So let's take a look at this particular price action right here, and this is January the 11th, 2024, and let's take a look at it on a 10-minute chart. Notice the 10-minute chart has the same color of candles on it. So we were looking at, this is the candles from January the 12th, and there's all the 10-minute candles from January the 12th right there. Let's go to January the 11th. There it is. So there's right there's where the green candle is. That's where we opened. The bottom of the green candle is where we opened. And sometime during that 10 minutes, the price action went up and down, closed right there. Now then it's come over here, the next 10 minutes. You can see down at the bottom of the screen, right there, you can see the time stamp right below my pointer. All right, that's 8:50. So the first one was 8:30, the next one is 8:40, the next one is 8:50. So this one's an 8:40 candle, and at 8:40 the price opened right here, and you can see that it would jump from this point right here where it closes over to here and then comes down. Then at 8:50, the price jumps right over here. And at some point during this 10-minute period, it goes down and then comes back up and goes up here to this little wick, and then it closes right there. And then it comes over here at 9 o'clock exactly. At 9 o'clock exactly, at some point, the price action comes up just a little bit, and then it flushes way down. The price action goes way down, and then it comes up here, and then it closes. I hope you get the idea. So that is what the candlestick shows you, whether the price went up or whether the price went down. And then also exactly where it closed. I can hover my mouse over the top of this, and at the top of the screen, it's showing me exactly up here what the open is, what the high is, what the low is, and what the closing value is. So it's saying on this candle that the open was $476.32. Now for this, I'm going to put back on my crosshairs, and you see the price all the way over here to the right side of the screen. So it said open at $476.32. So if I hover right over the top of where that candle opened, you can see my cursor on the far right side. You can see the price action, $476.31. Then it said it closes at $473.82. So I run it down here to the bottom, and I look over to the right again, and it's $473.81 is where it closes. But you notice that there is a high and there's a low. It said $476.38 is the high, so I'll go up here to $476.38, and there's the high of the wick right there. And then vice versa with the low. You can go down here and look at it yourself if you want to, okay? So there's the way the candles work. So open, close on the body, open, close on the body on a red candle, open, close on the body, open, close on the body. And at some point, these wicks is where the price action went down to and from. So you can see price action opened right here at 477.66. It went down here during the day. It kind of popped up. It came down like this, and then it came back up like this, and then it came down and it closed right there, 476.30. Okay, so you can see it opened here and it closed here for the whole day. Okay, opened here, closed here for the entire day. So when we go back to the daily view and we look at that candle, there's the candle right there. And like we said, it opened here, 476, 477, that's 477.59. And then it came down and it went through all that process, that meandering process, and it came back and it closed right there. So when we look at the candlesticks, we can see the price action of the day just by glancing at it, because the wick is showing us what the price action did at some point during the day, but overall it shows us what the open and what the close was on this particular day. So I hope that makes sense to you of what the candlesticks, what they're showing us, okay? And there's a lot more to the candlesticks, especially in technical trading. What technical trading is showing us is it's showing us the price action over time. So if I zoom way out here, I can see that way back here in December the 21st, that there was a bunch of people who were invested in the SPY chart way up here at the top, and that's going to affect me over here, this being January the 15th, and tomorrow's January the 16th when we open. January the 15th and tomorrow, this is going to affect me of what they did back in here. So I can look at this candlestick and I can say, tomorrow, whenever the market opens or whenever we're in the trading, I can say that this time, this place over here in all the way back in 2022, all that time back here, all these buyers that were buying up here, they're going to affect me whenever I get to trade up here. And all of this stuff means something. And I'll go over that in some other training videos as well. All right, now let's take a look at these bars down here at the bottom. And I'm only going to go over two things tonight. And that's the second thing I'm going to go over is these things right here. These is called the volume. Volume just means and reflects the amount of shares that were traded on any specific type of candle. So this reflects, the volume reflects how many shares were exchanged on any specific candle. So this being the daily chart, I can look at this candle, and this candle I'm kind of picking on, but we can go down here and we can look and see that it was trading about 76 million shares. And I don't have to guess that, because I can go right up here and look and see how much volume was on that candle. Hover over at 77.941 million shares were traded on this particular day. Now on the S&P, the spiders, on this ETF, if we're trading less than 100 million shares a day, we got lighter volume, okay? And if you're down to 50 million shares, like in this one, we're about 58 million shares, that is super light volume. Markets rarely go down on light volume. This one was an exception. We had 102 million. That's not bad. But markets very rarely go down big time with light volume. Usually the markets, when light volume goes up, And you can see that here. Here's a light volume day. It was 66 million. Here's another light volume day, 83 million. Here's another light volume day, 65 million. And on we can go. And I mean, look at this particular candle right here. This is a 55 million shares exchanged on this particular day on December the 19th. That's a super light volume day. And whenever you get around like Christmas time, here's December 21st, 22nd, 20th, here's December 26th. Look how light the volume was, 55 million on that day. Well, that's vacation day, and so you'd expect volume to be light. A lot of people are on vacation. So you can look here and you can see the volume. Well, that volume tells us what the interest was or what the fear was on that particular day. So this day right here, being a red day, you can see on this particular day, we had 140 million shares being exchanged on this day right here, December the 15th. So you can tell there was either a lot of fear here or there was a lot of people who were excited about whatever happened here. And I don't know what that was. It may have been a Fed announcement. I'm not sure exactly what happened there. But anyway, point being is that when the price action is negative and the volume is up, that means there was a lot of sellers. When the price action is up, or whenever the price action it goes up and you've got a lot of volume, that means there's a lot of buyers. So you can always tell what the volume is doing, and the volume predicts or helps us to predict what the price action is going to do in the future. Let's just take a look at Apple. Whenever Apple reached its absolute peak here, back in December the 15th, 2023, whenever we reached the day after the peak, we really had, and I'm going to put back on my cross here so I can see exactly where it's at. Whenever it had that peak, the next day we had a fairly good sell-off. That means we had institutions right here at 128 million shares being traded. We had institutions that were saying, okay, Apple is to a place where I'm going to take profits. And they sold a lot of shares. Now, it was still a green candle, or it was barely a green day, but it's still a green candle saying that there was a lot of buyers there, but there were still a lot of sellers. A lot of institutions had to have unloaded there. So the volume tells us a lot about what's going on in the price action. This gap right here, you notice this gap had fairly low volume. In other words, where the price here, and this is something about candles, price opened here, closed here, and then the next day it gapped way down. Probably had some bad news here. This was probably where the news said that they were not allowed to sell their watches or something of that nature on January the 2nd. I don't know. Maybe that happened back here. I'm not sure exactly what happened. But point being is that any kind of news or whatever can drive it down in a gap. Well, we look at that gap and we say, there's a lot of people who were long here, who were buying Apple, who are stuck right there at that point. They're stuck at this point down here at the bottom of this candle, and they're waiting for the price action to come back up here. Now, how many people are in there? I don't know, but if you look at the volume, you can see that the volume's 42 million shares. What if half of those people, what if 20 million shares are stuck here at the bottom, waiting for Apple to go back up? That means whenever my price action gets back up here, there's going to be a lot of people who are going to add to their selling. They're hurting because the price action is down. They want it to be up here. They want it to be going up. They bought it so that it would go up, but they didn't get that, and they got stuck right here at the bottom. So whenever my price action comes back up to that gap right there, it's going to either sell off for multiple days or it's going to sell off momentarily, depending on how it gets up there. It'll come up there and it will touch that. And then all those buyers that were here are going to turn into sellers, and they're going to be like, I want out. And so whenever my price action gets right up to here, boom, I'm going to be looking at that gap and at that volume. And I'm going to say, you know what? If I've got a chance, I'm going to jump on board and sell with those sellers. And we're going to get a little bit of money in here. Just in playing that play right there. That's just one example of what you can use volume for. There's a lot of others. Now, if I have this volume, whenever I'm going up to that line, this volume here will eclipse this volume, and it will blow right through that level. So it's very important how you look at volume. I was just recently in a trade in NVDA. And NVIDIA that had this candle right here, and you can see it had lots of volume in this candle and this candle. And I was in this, and I had shorted it because this was the top of NVIDIA, and so I was expecting there to be a pullback, and I didn't read my volume. If I would have read my volume, it would have shown me that, hey, we're going to blow right through this level. And if I'd have read my volume, then I would not have lost money on this trade. It's important to read your volume. So there is just two things that you can look at whenever you're going through the market and whenever I'm speaking or somebody else is speaking about what the candles are doing or what the price action is doing. Anybody who is a serious trader is not going to be looking at a line chart. Anybody who is a serious trader is going to be looking at something like a candlestick. And there's people who have their different preferences. This is the bars, and some people like bars, some people like hollow candles. And honestly, it doesn't really make that much of a difference to me. I like the solid green candles, and whenever I look at those, I can tell where my price action is just immediately. And then the second thing you learned tonight was a little bit about volume. Now, I'll be talking a little bit more in more educational series, if there's enough interest in it, to talk to you about what these candlesticks can do and what these patterns and what the looks of the candlesticks, when you put them together, what that means to a technical trader. But for now, you've got a little bit of the basics down of what a candlestick is and what the volume is. So I'm going to go ahead and sign off as Copycat Trader, and I will see you in the next video, hopefully tomorrow. Y'all have a great evening.